Michael, would you buy any of these banks?
I wouldn't be buying the banks right now, but I would be buying companies that are getting impacted by the news, companies that you might want to consider, companies like Disney, MasterCard. These are sort of travel-impacted companies, but they're not the cruise lines, and I think these are names with this gigantic sort of earnings miss that the world is having right now. I think these are names that are going to be at the head of the recovery, I think.
Why? I mean, travel is thought to be one of the most impacted and continually impacted the longer this goes on and the more cases that pile up.
Well, because it's not going to last forever. I think that if you look at this in a reasonable sort of outlook, which, of course, is anybody's guess, but our perspective is it's going to be a quarter or two. And in the end, Disney has good fundamentals. Disney Plus is happening. And I think you'll see a bounce back in credit card spending. So I think that what you really want to look at this as is, in my view, a really horrible, as I said, sort of global earnings miss. And what does that normally look like? Maybe a company that has good basic earnings has a problem, bumps down on a stock price because of some bad news, but then comes back on the long term. That's how I think you want to look at this. And that's why I think maybe you could put some cash to work dripping into some of these names that are being impacted.
Michael, for some investors who may have had a relatively decent allocation to bonds and have seen that rise, and they might be looking to switch into something else, what of the yield stock stands out to you? Very safe dividends that you think is worth switching some bond holdings into?
Well, first of all, I think that's something to really think about. If you have bond holdings, say, have an allocation of 60-40 and you have a 4 duration, and now all of a sudden the 10-year Treasury is below 1%, you've got some profit there that you can actually take and move into some names that have traded down. There are names, telecommunication names, for example, AT&T, for example, has a high dividend rate. And in particular, you can move out of some allocated bond holdings that you have that have actually rallied, take some of the profit, right? How much rallies are going to be really long-term in a bond index when the 10-year Treasury is under 1%? So that's where rebalancing really makes a lot of sense right now, is sell maybe things that have gone up and buy things that are really struggling right now.
Michael Yoshikami, thanks for phoning in.